On to the RCI hearing into the 1980s Bank Negara forex scandal, the Commission has concluded on the very first day of the hearing that the central bank had incurred at least 31.5 billion ringgit in losses between 1991 and 1994. It is not clear as to how exactly the losses were tabulated, but Chairman Muhammad Sidek Hassan says this was based on statements given by former and current BNM employees today. Based on the testimonies, he says the Commission also believes someone purposely concealed this figure from BNM's reports as it was not reflected in its balance sheet. Previously, the losses that were publicly reported stood at about 9 billion ringgit. The scandal led former BNM Governor Jaafar Hussain to resign. However, ex-Assistant Governor Abdul Murad Khalid testified earlier today that Jaafar was unaware of the magnitude of the losses. PNB is said to be looking to hold less cash and adopt a more aggressive approach with acquisition. In an interview with Bloomberg, its chairman Wahid Omar says PNB could reduce its cash holdings by at least 5 percentage points to 15%. A fifth of the fund manager's 266 billion ringgit of assets under management is in cash and money markets. According to Bloomberg's calculations, this means a 5% reduction would free up about 13.3 billion ringgit. One major issue, though, is the relatively weak ringgit. Wahid told Bloomberg the last thing PNB wants is to invest in a US dollar asset at 4.30 and have the ringgit strengthened by 5% within a year. Another issue is the lack of attractive investments. PNB owns stakes in some of the nation's biggest companies, including Maybank, Sime Darby and UMW Holdings. Malakoff saw lower net profit this second quarter, mainly on lower contribution from its Tanjung Bin energy power plant. Earnings came in at 103.3 million ringgit, that's 20% lower compared with just under 130 million ringgit a year earlier. Revenue rose to 1.7 billion ringgit, up 13.6% from 1.5 billion ringgit last year. Malakoff declared a dividend of 2.5 cents per share. Going forward, the company expects its FY17 results to be affected by lower capacity payment in the new revised Sagari Energy Ventures power purchase agreement. It plans to continue with its strategic initiatives to secure growth opportunities in the power sector, as well as to broaden its earnings base in complementary business sectors for the future. Nestle Malaysia's bottom line isn't looking too good this second quarter, with earnings falling 14% in face of higher raw material prices coupled with the weak ringgit. Net profit came in at about 162 million ringgit compared to 188.8 million ringgit last year. Quarterly revenue, however, inched up by 3.2% year-on-year to 1.28 billion ringgit from 1.24 billion previously, thanks to an increase in exports. It declared an interim dividend of 70 cents per share. On its outlook, Nestle said it is actually cautiously optimistic and will continue with its strategy to improve efficiency across the supply chain management. The local unit of the Swiss F&B giant said it is confident that its balanced approach of proactive cost management and effective trade and marketing investments will help to improve the profit after tax situation for FY17. Veteran banker Nazir is mooting the idea of a virtual board that lists down the top firms in ASEAN. Nazir points out that many domestic funds looking to diversify their portfolio usually look to developed markets when there could be better opportunities closer to home. So it makes sense to establish a virtual board that is visible across ASEAN. On this board, he says there should be information on the stock, the exchange it's listed on, information on how it can be accessed, with full transparency on how to invest and divest. The CIMB chairman says this board would help investors to obtain knowledge and insights on companies listed within ASEAN. This would help promote greater capital flows within the region.